All right, hey guys, thanks for joining. Today we are talking about the different real estate product types, core, core plus, value add, and how do they react during the market cycle, the ups and downs of the market cycle, what's gonna be the best for you to buy, to sell, to hold. Let's check it out. Okay, let's start by looking at a core product. Now, a core product is something that has newer construction, usually a national credit tenant. So in the industrial sphere in Denver, for example, that would be something like an Amazon warehouse that was just recently built. And maybe that offers, say, a 4 cap. Now, what's interesting about the core product is that it's the most stable out of all the different products. So over the market cycles, it might look something like this. Okay, we're starting at an average return at the market peak. It's going up, it goes down during a recession, and then, is leveling back out. Now, how does that compare to, let's say, a core plus investment? Now, this is something with generally older construction, maybe it's 90s construction, it has a less creditworthy tenant, maybe local or regional credit, for example. Now, that's gonna look a little bit more like this. It's starting with a higher return. It has a bigger peak. It goes up more when the market goes up, but then it has a lower low. It's more volatile. The difference between the peak and the valley is significantly larger than your core product, for example. But then the market starts to pick back up and it goes back up there. This is all relative. Now, the final product type we're gonna look at is a value add product. And this one is interesting because it starts usually with zero return for maybe a year or two. So it's starting out here. You could even have a negative return because you're putting money into the investment up front with the plan of achieving a higher return over time, right? So the residential example is a fix and flip, right? You buy a rundown property, you fix it up, and then it's worth more. So we're starting with a zero return, okay? But then let's say you rent it out and your return goes up here, okay? You're achieving the highest return, and then let's say the market starts to go down. Value add during a down cycle is still gonna have a pretty good return relative to other investments, assuming you actually succeed in adding value. Now, this is why a value add is the riskiest, and let's just finish this out. Market picks back up, and it also still has the highest return out of all of them. Now, value add is the riskiest because you have to actually add value. And if you do not add value, you could lose your principal. You could lose your money down. What's interesting here about the value add compared to the other product types is that the danger isn't as much in a market downturn for value add. It's about actually failing to add that value. Assuming that you do succeed in adding value, over time, even with this zero return for the first 2 years, let's say, over, for example, a 7-year hold period, value add is going to have the best return over that 7 years, even accounting for 2 years of zero return. And it makes sense, right? Because it's the riskiest investment, high risk, high reward. Your core plus investment, this middle one, is gonna have the most medium reward or return profile. And then over time, your core investment will have the lowest return profile. Now, it's 2020, January 2020, and some people are saying we could be at the top of this market right now. And what you might be hearing is these economists are encouraging a flight to quality. What does that mean? They're encouraging you to go to a core asset because these are the most stable during a recession. If you buy it at the peak, the low isn't as low compared to the other investment types. So if you do think that we could be heading to a significant recession, you might want to trade for a core product type. Value add still does offer a lot of potential, assuming you add value, and core plus would potentially offer, or not offer, it would potentially have the worst return if we did go into a recession. So there you go, guys. One more time to wrap it up. Core is the most stable, core plus is more volatile, and value add typically offers the best return, assuming you actually add that value. So there you go. I hope you found today helpful. Feel free to reach out with any questions, comments. Look forward to speaking with you soon. Thanks.